Welcome to Pete's Property Podcast, brought to you by Buyers and hosted by Pete Wargent, buyer's agent, finance and real estate expert, and all-round property guru, plus published author. Join Pete for 30 minutes as he chats all things property with a new guest each week. Learn practical tips from the movers and shakers in the property industry and well-known personalities sharing their property journeys.
G'day, welcome to this week's episode of the Pete Wargent Property Pod. This week I've got Suvidh Arora from Cinch Home Loans. Suvidh, welcome. It's a pleasure to have you on.
Thanks, Pete. Good morning to you, and thanks for having me.
No, it's a real pleasure, and I know you've got a really fascinating backstory and property journey to share with us, and also some tips from the home lending space and the property lending space. So let's start at the beginning. You grew up in India. Tell us a bit about that. Where were you and what was it like?
Growing up in India back in the 90s was very different to the times we are in right now. We didn't have much technology. Used to travel a lot because my dad was in a transferable job. So I've moved along a few places, mostly in the northern regions of India. That's where I did all my schooling from, went to college, did my uni, did my first job, started my first business. All of that was in the late 90s and early 2000. From there, basically, I got into educating people to get into MBA, programs. So I used to teach quantitative abilities and analytical reasoning to people. And from there, life took different turns and ended up in Hong Kong as an investment banker. So yeah, that's pretty much it.
So your parents were, as you mentioned, they're in transferable jobs, I think PAYG employees, but You had an entrepreneurial family member, I think your uncle, who took you under his wing. Tell us a bit about his influence, because it's not every person takes that step from the PAYG employment into the entrepreneurial journey of actually running their own business.
My dad actually passed away when I was quite young. My mom basically started looking after the entire family, and it was around that time that my uncle, who's 10 years younger to my mom, took me under his wing, and I had always been very close to him anyways, and he had always been an entrepreneur, and it wasn't like he taught me things or anything, but I just watched him, and he was just such an inspiration for me that I picked up different sort of things from him. I still, to the day, whenever I have to make a decision, I actually think back on how would he do it. Even sometimes, actually pick up the phone and discuss ideas with him and, take his advice. And he's always been a role model for me. He's basically, he built up something from absolute scratch, becoming one of the biggest particular stream back in India. As I said, he's just been the perfect role model for me. He's been a father figure, an idol, everything that someone young can hope for.
Yes, I mean, it's having a mentor or a guide, especially because you've gone on to found Cinch Home Loans. I guess that would be absolutely invaluable to have that level of experience and guidance. Now, if I've got my timeline right here, you said you worked in investment banking. I think you were at UBS/JP Morgan, JP Morgan, I should say. But if I'm getting my timeline right there, you must have been in the investment banking sector or industry when Lehman Brothers crashed and went under. What was that like being in investment banking at that time? And did you take away any key lessons? Because that was really like a landmark moment in global financial services. What was it like to go through that experience?
Yeah. I mean, it was strange. It was challenging. It was exciting. It was daunting. Everything at the same time. Funny story is, I had actually applied for a position for UBS in Zurich, but due to work permit issues, they weren't able to offer me a position there. They basically got back to me saying they really wanted me and they had a similar role available in Hong Kong and work permit wouldn't be an issue. So if I was interested, the job was mine. And I took it up. I had never traveled outside India before that. So I was on my flight to Hong Kong. The day the flight landed, I was waiting at the immigration counter, and the news flashed over there was Lehman Brothers goes down. So that's the day it happened. Suddenly I'm in a foreign country, starting an absolutely new job in an industry that's going down in flames. And there were protesters on the road in Hong Kong, outside all the investment banking offices and all of that. So it was a very challenging time. But at the same time, it created an opportunity to learn a lot through tough times. And that was my key takeaway, because my plan always was to get a foothold in the investment banking industry and use that as a stepping stone to do my MBA, which I wanted to do in finance. And it was a 12-month plan I had in mind. And I basically worked towards that and straight away went on to do my MBA from the UK.
Yeah, so I guess you're almost a citizen of the world with time in the United Kingdom and Hong Kong, and then ultimately Australia. So you've moved over or moved down under. But I gather even coming to Australia wasn't exactly smooth sailing. You had a few health issues along the way. What happened?
We moved to Australia when our elder daughter was born. And the plan always was for family, for a lifestyle. We'll move to Australia once we started a family. And the plan also was I'll get into either investment banking or strategy consulting when I get here. 2 months after we got here, I actually ended up having a leg injury, which was misdiagnosed. And, we went through hell. The doctors told me I'll never be able to walk again. So there was a lot of issues. And I was mental health wise not in a very, very good space, as you can imagine. And that's where I decided, I'm not going to sit down and just let things be. I want to be able to spend time with my family, do something about it. So I actually spent the next 18 months in rehab trying to teach myself to walk again, sometimes against the advice of most of the doctors and surgeons. And here I am today. I walk as normally as I can. I run, I play, I have a lovely time with my family. But what that also did was that gave me a lot of perspective in terms of anything can happen. And that was the moment when I decided during that phase that I don't want to spend 18 hours a day working for a big corporate and not have any family time whatsoever. And that's where I started exploring other options where I could stay at home, spend time with the kids, let my wife do what she wanted to do. So she always wanted to be a consultant, and she's taken off. She's the consultant who travels 4 or 5 days a week now, and I look after the kids while taking care of the business. So I'm the stay-at-home dad who also has his own business and does all of that things, while the wife goes out and lives her dream.
Yes, yeah, high-flying consultant with McKinsey. So you mentioned having a young daughter, which I guess gives you the motivation to work hard. But it's one of the curious things about the entrepreneurial journey is that those low points in your life, and it's never smooth sailing in my experience from having listened to hundreds of stories over the years. But strangely, those low points often give people the motivation to make a change or work harder or do things differently. And it is kind of curious how that always seems to work out that way, that the low points can actually spur you on to greater things down the track. So I gather you then went on to buy land in Australia without really, I guess at that point, fully understanding the process or being fully educated in how things were done in Australia. And then I guess that ultimately launched your property journey, which ultimately led you to Cinch Home Loans. So tell us a bit about buying your first property in Australia.
Sure. So because of the circumstances we found ourselves in as soon as we got to Australia, things obviously got delayed. We'd already committed to building our first home during that phase. So we went ahead with that. But that also meant, financially, we had, taken a step back because I wasn't able to work. And my wife had to take care of a lot of other things as well, including my health. And there was a lack of guidance as well. So I didn't have anyone that I could talk to who would guide me on, what to do and what not to do when getting onto a property journey. So that was a phase when I think if I could go back in time, I could do things differently and all of that. But 4 years after we got here in 2017, I had enough. And, I was sitting down and talking to my wife and I said, look, if we don't do it, if we keep thinking, we'll do it at some point, it's never going to happen because the property always keeps getting out of hand. The market always keeps increasing. So at some point we have to bite the bullet and we just have to, take our chances. So let's go ahead and see what's out there and put a deposit. And at that time, land was booming. People used to queue to buy a block of land, basically. We just decided to, go to one of these sales and got lucky, put deposit on one block of land. And I liked the idea because the settlement was in 18 months' time, which means it gave me time to plan how to get to settlement and all of that stuff. And I turned around to my wife and said, we don't have much money in our bank account, but I want to do more of this because I think we can make it happen. In the next 15 days, we actually put deposits on 3 blocks of lands. We maxed out our credit card. We borrowed money from some family just to be able to put that 10% deposit on all those blocks of land. And to be honest, it was scary because we were, borrowing funds from everywhere to just put money in. And we didn't know how it was going to happen, but we had the belief that we will make it happen. Over the next 18 months, we basically worked out, how we're going to construct, where we're going to raise the funds from, how the loans are going to work, and all of that stuff. In a way, we were a bit lucky as well because the property prices went up. So there was enough equity built in the properties. And also the settlement for the 3 was staggered by 6 months each. So it gave us, time between them as well. And, one thing led to another. We settled all 3, constructed all 3. They got rented out. Since then, have bought another 3. Things have basically started rolling. And what that has done, actually, is it gave me a lot of insight into how you can structure things to make them work for you, what could go wrong, what to watch out for. I have a clear picture of all those things. And that's what helps me a lot in giving advice to people when it comes to building their portfolio in property. Because when someone comes to me at Cinch Home Loans now, the question never is, yes, you want to buy your first home, and yes, we can help you with the loan for that. That's the easy bit. But what's your plan for the next 5 to 10 years? What do you want to achieve? Because that's where I want to add value to you. And I've got clients who started with me 2 years ago as first home buyers who are currently buying their 3rd or 4th properties. So it's that journey that I'm able to take them through, be that person that no one was for me in 2017, and just help ease the burden on them as well.
Yes, you've become almost through your own experience, a guide or a mentor, I think particularly to people who are starting out in their journey and they need a roadmap and some guidance in how to structure borrowing, how to even structure their portfolio. Tell us a bit about what you do at Cinch Home Loans. So you're known as a solutions-focused business, and I guess you're right at the forefront there of fielding calls from clients and giving them your first-hand experience and advice. So tell us a bit about what you do at Cinch and how you are different from some of the other services out there.
Sure. So our biggest emphasis is always on finding the right solution, not a cookie cutter approach to our clients, and basically just excellent customer service. Being there with them any time of the day, whatever questions they might have, whatever step it might be. It's not a case of okay, your property has settled. I don't want to bother with you anymore. The clients know that even a month after settlement, they can pick up the phone and ask me advice on, I need a plumber. Who should I contact? So it's things like that the trust gets built because of, we treat each and every one of our clients as family. Each and every one of them is a friend or a family. And what that translates to is also a lot of referral business. So we don't do any marketing or anything. I get on an average 5 to 10 referrals from existing clients every week. So, which is the best form of publicity you can get because it's warm leads. They already have that trust established, and you're starting at the front foot. And it all goes back to having that mindset from my investment banking and strategy consulting days, but also having been through that process where I can foresee what issues might arise, what their family situation is. So people even just go into the extent of discussing with me, we will start planning our family in a couple of years' time. So we want to plan ahead. So it's that deep that sometimes people, go into discussions because it's a very, very clear picture of this is what we want our future to be. This is what we want to achieve and how can we get there. And that's where we formulate a plan and then work towards, how to best structure the deal. Sometimes they even ask me on advice on which areas they should buy in. And, we do a deep dive into all of those things, try and do the research. A lot of the times I actually go to open houses with my clients. A lot of the times I actually go to an estate with a client to see, what the facilities are going to be like. So whether they should invest in that block of land or not. So it's going that above and beyond for each and everything, not worrying about, how much time and effort I'm putting into a client, because for us, they're not a number. For us, they are real people who have real needs. And if we can go that extra mile for them, we are building a relationship for life. They are my clients for life. They are my family for life. I don't have to worry about whether they'll leave me and go to another broker later down the line, because I do so much for them and they respect that, and they trust me for everything because of that. And it's just, blown out because of that.
Do you want to save on buyer's agent fees? You could save thousands with Buyers Buyers. As Australia's most extensive network of buyer's agents, we can lock in highly competitive prices. Plus, our national network of buyer's agents are some of the best in the business. So get the Buyers Buyers advantage and talk to us today. Call 1-800-975-051 or visit buyersbuyers.com.au.
You mentioned they have a background in investment banking. You've obviously got a great head for finance. So, Suvidh, every day when I log on at the moment, there's a new crisis. Shenzhen was actually locked down for a period of time, and everyone was like, oh, geez, this is going to create even more inflation. And then I log on, or thankfully that seems to have passed, but I log on the next day and oil prices are steaming higher. Inflation, everybody's talking about inflation, and it's not just energy, it's price of goods, fuel at the Bowser, you've got rents now going up, and it's just non-stop talk about inflation. Mm-hmm. Obviously, financial markets are pricing for interest rates to rise over the next 18 months or 2 years, and I've noticed just a few of the lenders just starting to increase their variable rates for new lenders. Mm-hmm. Overall, of course, mortgage rates are still low, but do you have a feel for what might happen? Obviously, forecasting the future is different. Do you have a feel for what might happen to lending rates for mortgages in Australia? And also, how should people prepare for the period ahead? I guess most new loans these days are actually assessed with a 300 basis points buffer anyway, but obviously people would be prudent to prepare for rate hikes, but there's still, to some degree, seems to be a fair amount of competition between the lenders, which is keeping a bit of downward pressure on rates. But what are you seeing at the coalface, and what do you say to your clients if they're worried about interest rates rising over the next couple of years?
So when we do a strategy session, we always plan for it. So I know banks have a 300 basis points buffer rate, as you said, but we build in our own buffers when doing calculations with clients. And our clients know that we are being conservative when doing those calculations, because we want to make sure that, the decisions that are made are not going to impact them negatively in the future. We also stay at the forefront of making sure that if there's any movement expected, our clients are the first to know. So we've invested heavily in technology, which basically picks up on those patterns. For example, we do automatic repricing with all the banks for all our clients, where, in the back end, the system's always working on seeing where the best deal is for a particular client. And if we can, get 10 basis points or 20 basis points of their existing rates by negotiating a better deal with their existing lenders. So we keep doing all those things to, keep saving them in the short term, so that they can build that buffer, which, should the rates go up, and the reality is at some point it's going to happen, the rates were going to go up, because they can't stay low forever. And it has started happening, and it seems like it will happen in the next 12 to 18 months anyways. But there's also expectation that there will be a point where the market will reach, and will reach a stable sort of position, which I believe should be around, for owner-occupied rates, it will be under 3%. And for investment, it will be more around the 3.5 to 3.7% rate. that's where the happy medium will end up being, which is what it was around the 2017, 2018 sort of time frame. And we've already planned for that. We've already taken all of that into consideration when writing all those loans and when doing those future projections for our clients. And that's what we continue to do.
Yeah, you make an interesting point there that investor mortgages tend to be priced with higher mortgage rates than for owner-occupiers. And over the past, I guess, 5 years or so, and arguably even a little bit longer since the APRA introduced APG 223, it's generally speaking been pretty hard for investors, maybe not for the higher income earning investor, but there's been a lot of tightening around things like interest-only lending at various points. And I think to some degree, investors are being a little bit standoffish because they're reading all these media headlines about potentially mortgage rates going up and making it hard for investors to borrow. Now, it's been a weird couple of years. We haven't had immigration really for 2 years now, and yet vacancy rates have already fallen to the lowest level in nearly 2 decades. Now the borders are just starting to reopen, international students coming back. What do you see? I mean, we're already seeing in many regions, there's just no rental stock at all. And even in the capital cities, we've got asking rents are up 10%, and now the borders are reopening. What do you see happening in the rental space? Because I'm struggling to see where everybody's going to live, given that we're not really constructing the big high-rise towers like we were maybe 7 or 8 years ago.
Yeah.
And we don't have the non-resident investors. And it's quite hard for your portfolio investor to add to the portfolio because of the restrictions on borrowing capacity. So, I mean, are we heading for some kind of a rental crisis, do you think?
It's hard to comment on that. But at the same time, yes, there's always been a shortage of supply as far as housing is concerned. But I think everyone can see that, and it's going to start happening again. Now, the key that we have to keep in mind is with the borders opening up, it's not only just students, it's also, a lot of qualified workers who would be joining the workforce, and suddenly they'll start coming and spending the money to, buy more or rent out or all of that stuff, pumping money into the economy. And that's where I think, the value will be added. That's where the demand will start happening. And once demand happens, the industry, the housing industry will catch up, and they will come up with projects to cater to that demand and provide them with supply. So in the short term, there might be some shortages in terms of rental supply, but that's where I see, rents will go up, which will in turn, increase the household income for the existing investors, right? So it's just, the money will start cycling even more once people start coming in. Tourism will start getting a boost as well, because that's obviously a big chunk of money that comes into the economy. And all of that will just start kicking things off a little bit more.
Yeah, it's a good point that you've always got these kind of balances and counterbalances in the market. And I guess hence the cycles that do continue to repeat or recur. Now you're based in Melbourne. Obviously, a lot of people have been working from home over the past 2 years. I'm actually coming down to Melbourne next week for the first time. It feels like forever, but I guess it's about 2.5 or 3 years. What are you seeing in terms of demographic trends down there? Are people getting out and about more? Is the CBD starting to get a bit busier, or are people still a bit reticent to go out and still working at home? What are you seeing on the ground there?
People are definitely, they've got used to working from home. It's a system that everyone's seen works. I was in the city a couple of days ago for dinner as well, and Crown, for example, it used to be a hub of activity in the evenings, and it's not as busy as it used to be. So things have obviously changed. However, that confidence will slowly start coming back. As I said, once tourism kicks in, that will be a big influence as well. People have started going out, and yes, working from home is still a thing, but businesses are now starting to tell their employees as well that they need to start coming into work. They need to start coming into the office twice a week, and that will only kick things on, because end of the day, with the CBD, for example, there are a lot of businesses that are relying on these employees coming back into the workspace because, again, they've been struggling through this time. And all of that is interdependent. One thing will lead to another. And that's where all that money starts coming in. When people start spending more and more, that confidence comes back. And I think, yes, the last 2 years have been bad, but in a way, that has made things a lot more real for everyone. There are things that no one thought we'll be able to do. People have been very resilient, and now it's a case of, yes, let's get back on our feet. Let's get back to life as we used to have it. In the next 3 to 6 months, I see a lot more activity happening in the CBDs, not just in Melbourne, but also the likes of Sydney and recently Brisbane has also gone through a couple of lockdowns. So all of that with time, I think we'll start seeing some normalcy come back.
Yes, I was down in the TV studios at Barangaroo last week, and it was quite evident that the big banks have not yet got everyone back to the office. And when you look at Barangaroo, one of the big four banks has got something like 8,000 employees there, and they're not actually in the office. But chatting to somebody this week who referred to himself as a COVID refugee living on the northern coast of New South Wales, but he's moving back in the next 2 or 3 weeks, I guess, in anticipation of the return to the office. So maybe what the big employers choose to do and when will obviously be a key factor in all of that. Now, you guys do quite a lot of stuff with younger buyers and first home buyers. Do you have any tips for younger people starting out? Because I read in the media today that the time to save a deposit, or at least a 20% deposit, is really blown out. But do you have any special tips or insights for people on the outset of their journey?
Planning is the key. You should always start looking at what you're going to do and how you're going to achieve it at least 6 to 12 months in advance of making a purchase. I've got clients who came to me last year and I told them, how to budget and how to plan for the whole process. They're coming back to me now because they're ready. I've had 6 or 7 in the last 2 weeks who've come back to me from a year ago and they're ready to purchase. So planning is the key, basically. Talk to someone who's a professional. Make sure that you've got a plan in place for what the budget is going to be like, what your borrowing power is going to be, how you're going to make those repayments. All of those things have to be taken into account. It's not as simple as I wake up one morning, I decide I want to buy my first home and I can walk down to the bank and do it. That's no longer possible. So a lot of planning has to go into it. There's obviously a lot of government schemes and subsidies and all of those things available for these buyers. And that's where we help them, right? I was talking to my optometrist the other day, and he's a first home buyer. And he was telling me how he's been thinking of buying a property and he wants to get a 20% deposit ready. And through a conversation, I told him, actually, did you know that you don't have to wait because you can just have a 5% deposit and get a property? He didn't have a clue. So sometimes it's just about talking to people and trying and understand what your options are, because that's why in my business I'm called the Chief Solutions Officer, because we believe if there's a problem out there, it has to come with a solution, and my job is to find that solution for you. We go back and just think about all those options available and bring out something that someone might not have even thought about. And that's where you add value to people. And there are options out there where you can go in, start a bit earlier than what you thought was possible. So it's just about starting a conversation.
Yeah, that makes perfect sense. A solutions-focused business, just what we need in these tricky times with things changing almost by the week, it seems. So what comes next for Cinch Home Loans, and where should people who want to find out more, where should people go to find out a little bit more about what you do?
We've got web presence, so anyone can go to our website at www.cinch.loans. We've been around for about 3 years now, one of the fastest growing brokerages in Australia. We were recently awarded by Rate My Agent as the number 1 brokerage in Victoria and number 2 Australia-wide, based purely on customer reviews. So it's tried and tested. If someone wants to have a confidential chat, they can pick up the phone and I'm always available. I'm always on the phone. So they can ring me directly if they want to. My number's on the website. we are happy to have a conversation started. We service clients all over Australia because one thing that COVID did was we adopted technology, and things have actually become a lot easier because a lot of digitalization has happened. So our process has become very streamlined in terms of that. I've got staff in pretty much every state. I actually have 11 brokers who work in my team now. So we service clients from Queensland on one end of Australia to Western Australia at the other end. So we cover pretty much all of Australia. Geography is no longer a factor. Anyone looking for a solution can reach out to us, and I will personally look after, because that's how the business runs. So I take care of all the strategizing and packaging of the products and discussing what the options are and guiding through that. And then my wonderful team basically takes care of the operational side, where they do all the loan writing and taking care of the back end stuff for the clients, so that it's a seamless journey for everyone, and they've got the best of both worlds.
Suvidh Arora from Cinch Home Loans. So thank you so much for sharing your journey from India to the UK and Hong Kong, and then ultimately to your success story with Cinch in Australia. Thanks so much for coming on. It's been a pleasure, and look forward to hearing from you again soon.
Thanks a lot, Pete. Thanks for having me here. It was a pleasure talking to you.
Thanks, Suvidh. Cheers.
Thanks, man. Cheers.
Thanks for listening to Pete's Property Podcast, powered by Buyers. Don't forget to subscribe and join us next time as Pete chats all things property with a new guest. And just a reminder that the information provided in this podcast is general advice only and doesn't take into account your personal financial situation or needs. You should always consult a licensed professional to discuss your individual personal circumstances.